What is up, investors, and welcome back to the channel. We're all feeling it. The hype around AI has the market on fire, but is it a true boom or just another bubble waiting to burst? Many of the so-called pure play AI stocks look pretty stretched, and that is why today we're cutting through the noise to talk about the stock that I believe is the safest, the most undervalued, and the best positioned long-term winner in the AI race, and that is Google. Now, forget the bubble fears. Alphabet is a fortress. And here in this video, we'll be covering the 4 key reasons why you need to buy Google stock right now. Before we dive into today's analysis, let me quickly tell you how you can get an edge in the market. If you want more than just a stock pick, you need to check out our Patreon subscription. We offer in-depth weekly newsletters with precise trade setups, full technical analysis, and the latest news on the best stocks. We also offer the Game Changer Ticker Flow AI, our proprietary trading app that gives you the best of both worlds, both technical and fundamental analysis to help you increase your wealth. So stop guessing and start investing with confidence. Click the link in the description, join our community for just $15 a month. Now, the first and most immediate reason of Google's dominance is their AI technology and diversification. Unlike companies learning on a single project, Google is a massively diversified, data-rich company. They don't just have an AI, they are fundamentally an AI company. The recent launch of Gemini 3 Pro is a game changer. It's outperforming current models from rivals like OpenAI, bringing in next-level multi-modal agentic features, meaning that it can handle complex tasks across text, image, and even video. They're even rolling it out as a new AI backbone for the core Google search experience. Plus, talking about infrastructure, Google is not just a consumer AI company. They build the machines that power AI. Their proprietary TPUs allow them to train and run these massive models with superior performance and lower costs than competitors. This is a massive self-reinforcement advantage, and it's a strategy that's already paying off with major clients. For example, Anthropic just signed a multi-billion-dollar deal with Google Cloud for up to 1 million TPUs. This cements Alphabet's position as a key infrastructure provider for the entire AI ecosystem. As well, if you look at the numbers, they tell a story of incredible financial strength that is surprisingly undervalued by the market. Alphabet posted its first ever 100 billion plus quarter in Q3 of 2025, beating expectations with a massive 16% year-over-year revenue growth and phenomenal EPS growth of over 35% in the past year. Despite this growth, the stock trades at a current PE ratio of around 29.56 and a forward PE of around 28, according to data. For a company growing at earnings at this rate, that's incredibly attractive and arguably heavily undervalued. They're also actively buying back shares, which is a strong signal from management that they believe that their own stock is on a discount. But the real engine of the future value is Google Cloud. This segment grew over 34% in revenue, and its backlog, the money contracted for future work, grew by an outstanding 82% year over year, outpacing rivals like Microsoft as well as AWS. Now, to our other reasoning here is Waymo and the AI leverage. Finally, we could talk about the X factor and the assets that haven't been fully factored into the current stock price, which is Waymo. Now, as we know, Waymo is Alphabet's autonomous driving subsidiary and is quickly expanding its driverless ride-hailing services across cities like the Bay Area. This is not just science fiction, it's a rapidly adopting, high-margin, and real-world service that most analysts undervalued. If Waymo eventually spins out, it can unlock massive shareholder value, adding potentially hundreds of billions of dollars to Alphabet's valuation. So now that we covered the most recent news on the stock, let's take a look at the chart and analyze where this stock has the potential to go over the next couple of months. Now, as you can see here on this daily chart of Google, the stock has been one of the most fascinating and the outperformers year to date. We can see that Google is currently reaching a price of around $300 per share. We obviously reached a high of around $305, and we immediately sold off here on the open. But something I want to acknowledge here is that we are well above in a nice uptrend. Following the 50 EMA, this blue line that you can see on my screen, we haven't even touched it once, right? Ever since we got above it, obviously the April lows, we have not even come close to touching that 50 EMA as support. we generally come into it, right? We kind of, skim above it for a little bit, but then the buyers find a lot of aggressiveness and we see the further upside here on Google. Something that I really want to acknowledge here is that even though Google is at all-time highs, the overall current market sentiment is very negative. We have the overall fear and greed index reaching a low of extreme fear, as well as the overall market momentum here is reaching a level that is close to its overall 125-day moving average, which is a very key area of concern here. So with this market jitteriness, I do believe that Google is still poised for extreme growth over the long term as an investment, but right now we may see a pullback, obviously in line with the overall markets, which are now around a little bit less than 10% from the all-time highs here. So looking at Google from the earnings day, we saw obviously a huge increase here in the price action. The earnings was on the 29th of October, and they be very outstanding. We saw YouTube also accelerating with that growth now towards 15% there on YouTube, which is very important. Now, I believe that the stock can now pull back towards my first support level of the 50 EMA, which is a level at around 260, because we haven't even tested it, and I think we are very close for a pullback here on Google. My second level is going to be here, the overall last area of support that we had when we crossed above the swing high anchored VWAP. We came back, tested it, found that low, and I believe that that's going to be the next area of support here. Obviously, it's towards more of a longer term swing trading type of oriented strategy towards $228. But I believe that Google is still going to go towards the upside. Just, saying that if we do pull back, just like the general market, we may see some overall moves like this. We undercut some levels, and so we go towards the upside, right? Towards the price targets that I still have, towards 308, and my second price target here of $370 here per share on Google. So while others worry about an AI bubble popping, Alphabet is in a unique position. We believe that it is the most diversified mega cap tech company with superior AI technology, proprietary infrastructure, a hyper-growing cloud business, and using undervalued moonshots like Waymo to continue its future growth. Now, if you do your own research but are looking for the best stock to buy in the market, we believe that Google is the best stock to add to your portfolio. Now, if you found this analysis helpful, smash that like button and subscribe to the channel. Let me know in the comment sections below whether you're buying Google or if there's another AI stock that you think is better. And as always, don't let the markets whip you guys out. I'll see you guys on the next one.